Hello, everyone. Welcome back to the channel, Matt with Green Bar Trading. It is early on a Saturday morning, but I felt so compelled to make this video right now because while earnings season is here, it is showing a lot of what we were talking about last week. So when I made last weekend's video, I had said, watch what happens when companies start to show their earnings reports and the price action that follows. What we're seeing is exactly what we saw in July of last year and also August. The price action is skyrocketing after these earnings reports. The earnings are what is continuing the market higher. Companies are not only showing great quarters, but they're giving guidance that is even higher for future quarters and future year outlooks. This is key. That is what makes a stock market continue higher. Even at these valuations, if a company is raising future guidance, that is exactly what the market needed to see. Now, this is really important. On Monday, the market makers scared everybody to sell so that they can buy at lower prices. This has happened numerous times. And in our video, we called the drop to the 40 RSI has gotten bought up every single time. The market pulls back. These little quick 4%, 5% pullbacks from the high that may have been from the week before. Recent trading, it pulls back in these big drops. It scares people. They sell, and then the smart money comes in and they buy the dip. Now, if you were fortunate enough to buy the dip on Monday or Tuesday, whenever you got in there, you reaped a lot of benefits. And I don't think that it's going to stop here. If these earnings reports keep coming out and seeing what can happen with a new leg higher, because that's what we're seeing on a lot of these stocks, Snapchat, Domino's Pizza, so just some that are coming to my mind that just had earnings reports and they gapped up to totally new levels on the charts. And that tells me a lot. And we said, watch the earnings reports. It could show you what is going to happen in the next couple of weeks with the stock market. And the earnings reports have been great. The stocks are gapping up like I have never seen before. Well, like I said, in July, this happened. And early August and September, we saw amazing opportunities in the options market or just buying shares long. And that Monday of this week, that is just an opportunity that has been given over and over again. And we tried to make this so clear in the video. When we bounced to that 40 RSI, that was the time to get in there and buy. I am wearing the closest color shirt to green that I own. It's more of a turquoise, but it's green. A lot of people are calling for the market to crash. I am calling for the market to have an explosive new upside. Now, yeah, you might say, okay, that just happened, Tuesday, Wednesday, Thursday, Friday. That is super strong. Once we got the dip on Monday, all these stocks are breaking out to new highs. When they break out to new highs, you might see consolidation, but you are in a new range now. You're not in the old range, which also seemed extended at the time. It's only extended until they tell you what they're about to do for the future quarters. And they're telling you that they're going to be earning record amounts of profit. So these companies are continuing to, produce, and that's the bottom line. If these earnings reports came in and they were guiding a little lower, then this would not be happening. So you have a ton of liquidity, right? You have a ton of, money on the sidelines. The stock market is filled with cash that is not even being put to work yet. You have the 10-year, you have bonds that are not even giving anything. They're going to be heavy risk on with equities. And we're in a whole nother leg up here. So here we go. Sharing the screen with you. Now this is Snapchat. They had their earnings last week. Unless you live under a rock, you can see we were trading in a range and we broke above that range. Same thing happened back here when earnings came out. And, these are previous levels that I had drawn last September. We consolidated and broke above, what was this range here that we were in. So if I could just draw that out, I'll try to get this as close as possible. All right, you have a range here, and then earnings, boom, just blew it up to a whole nother level. So then you move along and you're in another range. Earnings, again, outlook, better than expected. Now you're in a whole nother range. And you see this with stock after stock. Domino's Pizza. Well, it only went from 486 to 548. That's all it went. Huge gaps up here to a new range, huge gap up to a new range. So you have Domino's, you have Snapchat, a couple other ones. Did any of these go yet? No, these are all for this week, but Microsoft breaking out to a new range. And guys, this is from last September. You were in this trading range here. We're now in a new range. Once you get past these trading ranges, now you're going to be at elevated levels. You've already seen the 4 or 5% pullback. Now these little pullbacks, they were so healthy. That is exactly what the market needed on Monday. We saw it. So if we look at the overall market, this is the SPY. These pullbacks that we see, this is all so healthy. It pulled back to the 50 here, 50 here, 50 here, 50 here. And it pulled back here on Monday on heavy volume and then just got bought right back up. But those are the pullbacks that are going to continue to provide a very healthy market because it shakes out some of that. It shakes out some of those, skeptical, money, whatever you want to say. It just shakes out the weak hands. And once it does that, and then new fresh money comes in, you have room for new levels right here. Starbucks is another one. This is a breakout of this level. And now we're in a new level. And Starbucks has their earnings this week. Now you have to watch some of these for being a little extended going into earnings. But if their earnings and their guidance is so great, they're going to continue to stay with their stock price should hold up. Here's another one. We had Amazon break out of a very clear level. So this was trading in a range. We're now above that range. Now, if you think you missed the move, you didn't miss the move. Yes, you missed, potentially a great move here, but this is just the beginning of a new trading range. So once this came up, it broke through previous highs, it pulled back, retested that level. This was a great time to buy it. And now we'll continue higher. They have their earnings report as well on the 29th. If the earnings reports are good and consistent with what we've been seeing, there's no reason why this can't develop a new trading range. And that's exactly what is starting to happen with a lot of these stocks. A lot of these stocks already saw the pullback. They pulled back on Monday already. So, these have seen little, mini corrections, which is so healthy for the market. Apple, another one. You had a key level here. It broke out of that level. It came back. It retested right here. That's, close enough to the breakout. It retraced from 150 to 140. Excellent time to buy. And then it's going back up. This is going to be in a new trading range. Once it got out of these ranges, we have been range bound with a lot of these major growth stocks. These stocks that are excellent companies have broken out already. I think, now this is just my opinion, I'm no financial advisor. My videos are just for educational purposes only. It's just what I see, and that's it. But to me, as long as the earnings reports continue to come in really good, and we've already seen pullbacks from the highs, this gave you from 138 all the way to 123. This already corrected. A lot of these stocks have already corrected. So some of them, like Ford, for example, this has already corrected. It hit highs of 1645. It got a bounce off a beautiful trend line, and they have their earnings also on the 28th. This could be good opportunities. You can, if you want to profit off of some of these opportunities, there's ways that you can do it. You can buy options. Now, the only thing, if you wanted to buy call options, which was very popular last July and August, if you want to do that, you just have to be careful that you're not paying too high of a premium. Normally, you want to pay about 4% of what the stock price is at the time. If you're paying any more than 4%, you can really get crushed on that, because you're paying a premium basically for the implied volatility of what the stock could see into earnings. They want to collect on these big outsized moves, either to the downside or the upside. So the premiums are elevated during earnings. One other way you could do it is just to buy shares. You don't have to pay a premium unless the stock has already moved. In the case of, Amazon, it already moved. Microsoft, it already moved. Apple, it already moved. So you are paying a premium going into earnings. PayPal is another one. This is approaching a triple top here. It has earnings. It already had its sell-off. So right here at the beginning of June, it was trading at, 230. So where were you? Were you afraid, to buy? Because that's when people make money, when it's not looking good, when things are scary. And that's what they did to everybody on Monday when they tanked the market only to buy at lower prices. We see this all the time. So anyway, these stocks are all setting up for potential new levels. As long as the earnings keep exploding and really showing, future guidance, it's all about future guidance. They could make $1 billion, just crush earnings. If they don't provide guidance that is exceeding analyst expectations for future quarters, the stock is not going to go up. It's all about the future earnings. So as long as these companies continue to provide outsized, earnings growth and, full year guidance that is better than expected, then, you might not see the stock go up as much as we would like to see. But what we are seeing is they're guiding higher. So, the market, it does also go to show that what people thought was an extended market and valuations were too high, they were pretty much, not totally in line, because we are still, overvalued a little bit, but the companies are earning money, hand over fist. I mean, they're really, really doing very well. There was a lot of stimulus pumped into the market. So, some of these that we have next week, Spotify, this is one that is far off its highs. Does this give us a big move? Maybe. Let's see what it did in July. July, it lost $2. So who knows what that one's going to do. Qualcomm is another one. This one is off its highs. It's starting to make a move, a pretty good move. Like we said, Microsoft, that is just in a whole nother range now. Amazon's in another range now. Look at what Snapchat did. AMD, this is another one that is looking like it is just priming to make new highs. So we have to just break through, basically the $100 mark on that one. So we've already seen pullbacks. This one has shaken out all those weak hands, and now there's fresh money to be put to work. So, some of the companies that have earnings this week, it could be a way to profit on the long side if we continue to see strength in the earnings reports and the guidance. That's basically the point of this whole video. The whole video is not to listen all the time to CNBC or whatever they're telling you, and the market is going to crash or whatever it is. Sometimes people have ulterior motives, not all the time. And a lot of times, just because you hear somebody say something, even me, don't take what I'm saying. Do your own due diligence is basically the bottom line. You have to do your own homework in the stock market. You can have 100 people say one thing and 100 people say the complete opposite. People thought bond prices were going to be 2% on the 10-year right now, not 1.28 or whatever it is, 1.30. I don't remember what we did on Friday. It just goes to show that even the people that have been doing this for a million years can still be wrong. So, get in there, look at the charts, watch what the price action is doing, watch how things respond to earnings reports, and, trading accordingly. It's risky. It is definitely risky trading around earnings. I recommend minimizing your risk as much as possible, but, keep seeing what these companies are doing after earnings and watch how they respond. So far, we're seeing the companies just blowing expectations and, really, really looking good. So guys, I hope that, maybe this gave you a little bit of, something that you take away, something that you learn from these videos. That's why I do them. That's why I'm doing it so early this morning too, because I started to read this morning and my brain is highly active basically all the time. It's tough to shut off my brain. It's constantly locked into the stock market. So I like to provide exactly what's up here to my audience as I'm thinking it. And that's why I did this video so early this morning. And we'll upload it at some point this weekend, but we have a very busy week coming up, a very busy couple of weeks coming up. But this week in particular, we see, and even Tesla has earnings. We see a lot of companies with earnings this week, some real high profile companies. So I hope everybody does well. Keep your, manage your risk, but have fun with it. Okay. That's the bottom line. Have fun with it, minimize your risk, and, that's about it. I hope you guys enjoyed the video. Thanks for watching. We'll see you on the next one. Take care.